The world is divided into two parts. Those who are vehemently against Martingale and those who are firstly for it. It's like comparing Nikon and Canon fans or Mercedes and BMW enthusiasts. The Martingale strategy for binary options is one of the most independent capital management strategies. Hello everyone, my name is Spot and I'm very glad that you're tuned into this video, which means you're interested in trading just like I am. I created this YouTube channel to share my experience I gained over years of trading. Yes, I know things or two about it, so I decided to share my experience. There's a lot of interesting and useful content here, so subscribe and don't forget to like the videos. I also have my own Telegram channel where I share accurate signals. If you want to work with me, subscribe to my Telegram channel. The link is below the video. The Martingale strategy for binary options. This strategy has both opponents and pro-opponents for a reason. Martingale and binary options is a completely separate strategy that doesn't even require analyzing the assets. You simply buy an option with any forecast. In the trade turns out to be a loss, you increase the investment amount over the same trade again. By increasing the investment amount, your profit covers the previous loss. Initially, the strategy is designed for a 100% profit scenario, in which case the trade amount doubles. However, since binary options yield 70 to 80% profit, the trade amount increases more than twice after a loss. But why does the Martingale strategy's binary options have scarcely popularity? Any artificial person will say that it's simply playing roulette, a lottery, and so on. However, many traders even apply the Martingale strategy in the forex market. For example, most trading robots are based on the Martingale principle. Traders have learned to use this method effectively. Continuing the example with the Nikon and Canon fans, there are people who own both cameras and use them heavily, claiming that a successful shot doesn't depend solely on the camera. When to apply the Martingale strategy in binary options? Using the pure Martingale strategy would be quite risky since, even without it, you need to increase the amount at higher risk by more than 2 times. Therefore, traders use the strategy only in conjunction with the analysis. If you are conducting the analysis and determined that the EUR USD pair should rise, but your trade turned out to be a loss because you rushed with the options time frame, and you still see that your forecast is accurate, you can apply the Martingale strategy for binary options to recover the loss and turn a profit. When is it better not to trade using the Martingale strategy? It's better not to use the strategy during the opening of the European and American sessions, as these times exhibit higher volatility, which often leads to illogical moments. Don't trade against the trend. Avoid trading before the releases of important economic calendar news. Overall, the strategy has its place. It recovers losses with a profit from the initial trade. With a favorable trend or a scarcing strategy, it's possible to constantly close trades in a profit at the initial stages or for increasing investments. Mathematicians claim that if you completely execute analysis and trade solely of the Martingale strategy for binary options in its pure form, the first trade can close with a profit of 57%. The second has a chance of closing with a profit of 79%, and the third is as high as 98%. And now let's move on to practice. Let's start trading and see what is happening in the market. As you can see, my chart is full of information. So for the USD and Japanese yen currency pair, there seems to be a descent situation, but it lacks clarity. I want to add the alligator indicator to the chart to gain better insight. And so, what do we see now? The alligator indicates a strong upward trend, but the price is moving erratically. It's better to skip this pair. And now, the British pound with the US dollar. Here things are much more interesting, as the chart is not volatile. I will open a trade on this currency pair and prepare for trading. We'll be trading using the Martingale Method, as I've been waiting to demonstrate it for a while. I'm opening a trade for decrease. Look, the RSI indicator is currently in the oversold zones, and the alligator's jaws are fully open, indicating a strong downward trend. The conditions for entry could be better. Additionally, I will use the Martingale trading system, which is short, involves offsetting losing trades. If this trade closes at a loss, which I hope won't happen today, I will immediately open a trade with an amount twice as large. If that trade also closes at a loss, I will open another one and decrease the amount again. Only one profitable trade is needed to recover losses and turn a profit. By the way, there is a double top formation on the euro and Japanese yen currency pair. It's possible to enter a trade for a decrease here, and this is a very powerful pattern that works in 9 out of 10 cases, or maybe even more often. It's better to take the risk than to miss such an opportunity. So, I will open a trade on the euro and Japanese yen currency pair. A 90% payout rate is quite good. So I will open a trade for $600 for 5 minutes as soon as the price rises a bit to get a better entry level. Usually, you need to wait a few seconds. So, well, the price has to rise a bit. I can open the trade now. For just 3 minutes, since at 5 minutes there is a chance of a loss due to correction. Back to the GBP and USD currency pair, the price is almost stationary, moving within the same range. It looks quite dull. The price is just moving back and forth within a 20-point range. Since the market is volatile right now, 20 points can be considered a small movement. By the way, on the larger chart, you can see an accumulation pace. I've highlighted it in red. Accumulation pace are very pleasant to trade if you have the time and patience to wait for a product trading signal, namely an exit from the range. And when the price remains relatively flat for several minutes, simply draw a horizontal channel. And then wait for the price to exceed this channel. If it goes up, you can trade upward. If it goes down, trade downward. It's a very simple trading strategy itself, and it often works, so I use it. There are only 16 seconds left until the end of this trade. The price has almost returned to the opening level. Just a little more. If it drops a bit more, there might be a profit. Only 5 seconds left. But no, the trade closes at a loss. Now the Martingale strategy comes into play. Okay, I'll wait for the price to rise a bit and then open the trade to decrease. This trade for $300 closed at a loss, but the analysis isn't cancelled. So we will open the same trade for $600 and it works. I will offset the loss and make a profit. It's that simple. So I opened the trade right from the upper accumulation zone. It's an ideal entry level under these conditions. Moreover, the alligator indicator shows no signals of closing its jaws, which is a reason to re-enter for a decrease and anticipate profits. Most likely, the price will rebound from the upper accumulation zone or a channel and go downwards, and few points will be sufficient for me to gain a profit. Alright, looking at the menu on the right. For the euro and GBP trade, we have 40 seconds left, and for the current GBP and USD pair, we have 2 minutes remaining. Oh, the price has exceeded the accumulation pace upwards. You know, this is actually good, and it allows me to demonstrate how effectively the Martingale method works. It ensures staying in profit always, even if you have only 50% profitable trades, like meaning the one trade profit, one a lose, one a profit, one a lose, and so on. So if you employ the Martingale, you're still end up in profit. For instance, you start with $300. If it closes in a lose, you enter the next with $600. If it closes in the profit with a 90% payout rate, you receive $540, which offsets the $300 loss and provides a net profit of $240. So this is the simplest way to make gains if you have an average strategy with a 50% win rate. And by the way, the EUR GBP trade closes with a profit. And most likely the GBP and USD trade will close in a loss once again, which I'm extremely excited about at the moment, as it will allow me to practically demonstrate how the Martingale works. There's about a minute left until the end of this trade, so let's await its closure. And as you can see, the trade closed in a loss. Adhering the Martingale method, I'm opening the next trade for a $1,200, less than 3 minutes for decrease. Furthermore, on a 15-second time frame, we see a mirrored resistance level from which the price rebounded. This trade with a 100% profitability should close in a profit. Let me remind you that at the start of this trading session, my balance was $48,073. Do you think I'll reach $49,000 if this trade closes in the profit? Let's wait and see. The trading is about to close with a profit. As you may recall, at the beginning of this trading session, my balance was $48,070, and now it's $48,613. This is despite the fact that I incurred 2 losing trades on this pair and should have lost $900. Thanks to the Martingale and offsetting strategy, I'm ended up in a pretty good profit. That is how it works. Thank you for your attention. Don't forget to subscribe and like. Also subscribe to my Telegram channel where I share accurate signals. If you want to work together with me, subscribe to my Telegram channel. The link is provided below the video.